Welcome back to Main Station. So this video is probably going to be one of my more important videos. I'm going to talk about the S&P 500 and what its correlations are between 2008 and 9 to 2018 and 19. So we are talking about a decade of data, to be quite exactly actually. And it's going to be very interesting in my opinion. We are now looking at the S&P 500 index. The reason why I didn't choose the S&P SPY is because I just got already pretty much or I got already some TA on here, and since I'm going to use this in another video, I just talk by using the S&P 500 index, which is price-wise basically just multiplied by 10, and it follows the S&P quite to the point. So it doesn't really matter what you use. You can do this yourself, of course. And also the reason why I'm using the index of the S&P is because as I already said, I have no TA on here, and you can follow me along by using or by doing what I'm doing. So to get started, I'm going to draw. I'm mostly using Trendlines now, Trendlines and patterns, of course. I'm less focusing on indicators. You can do this, of course, yourself, and I'm going to include them right here. Just smaller-ing or making it a little bit smaller. So we are looking at the S&P 500 index on the weekly, and this was 2008 to 9, and from 00 we've or from 01 to 02 we've seen an ascending channel, and you can draw it just like that, and on the top a channel line. So like that. Just getting a bit closer. Yeah, like this. And after it, so after it went above, this channel line on the top became more or less not important, and it more or less it dissipated in this price action right here. So I won't look at it any closer, and so it broke out, formed more or less a double top. The second high was a bit higher than our first high, so we can draw a trend line right here like that. And on the bottom we have 3 touches, well, like 1, 2, 3. You can draw this like this. And on the 4th touch, which was here, it broke. It went down, consolidated, almost retested it, went down again, and formed a little reversal flag right here on the bottom. You can draw it like this. So it formed a bear flag on the top and a reversal flag after the move down on the bottom. So it broke up again, retested the bear flag of the double top of 2007, and of course you see in 08 it finally broke down, and this was over a period of this was September 07, and our bottom was around March 09, like 1.5 years. So this has been playing out over a longer period of time. So this is going to be important if we later are going to look at price action now, and recent price action. So to move on, our trend line we had on the bottom of this channel since 02 from 00 to 02 or 03 more or less. Then what's interesting, you can see this right here, it became resistance on both touches. So the move we had down retested this trend line we had of this channel going into the bull market to 08, and it retested it 2 times, and our bear flag has only been tested once, and this is right here. It almost reached on the first comeback, but it didn't. If we look at it on the daily, then wait a minute. So okay, go back a little bit. So yeah, right here you can see it a bit more clear how it retested 2 times right here before it went down again. And so to conclude this, our channel line of this channel, it became unimportant while it broke to the upside, or while it broke out of this channel right here. It didn't really retest, it just formed another pattern, and this was a bear flag. Then this bear flag broke, went into an reversal flag, which retested the bear flag plus the trend line of the ascending channel. And after that we've seen, of course, the crash. So now moving on to our recent price data, recent price action. So of course we had a crash right here, and I'm not including the exact bottom. I will be drawing this like that, just correct it a little bit like this. So, and I'm going to look at where we are now. Yeah, you can use it like that. We have 2 touches right here. It broke below, but it came back up again real quick. So I think it is okay to not include this wick to the bottom. Also because we can form a very nice channel by doing that. You can see it right here. So we have this upward channel, and after our correction between 014 and early 16, we formed another channel. So we formed a channel in a channel. You can see this right here, like this. And to be exact, let's do it like that. In this channel, we formed another tightening range, another channel, right here. So this is channel inception, to be quite frank. And this has been then become like resistance right here, or I mean support right here. But this won't be too important. So, but what is important is that we broke out of this channel we had right here, went back up, corrected through it. This channel became more or less unimportant, or these lines became more or less unimportant. And then we had, same movements like we had in '08. We had a double top, more or less. Our second high was a bit higher. And then we had a few touches on the bottom. And as you can see, we had 1, 2, 3 touches, and on the fourth touch it broke. This is the weekly. And if we're now going to the daily, and what you can see is that we didn't broke out of our big channel, which we formed like we did in '08. But we broke out of our smaller channel, which has been the channel in a channel. So I would still say that the price movement and pattern usage is very similar to '08. And now what we had is we had a bear flag on the top, 4 touches on the bottom, 2 to 3 touches on the top, like we had in '08. And now we've seen it break. Our first touch is now reaching our trend line of this channel, as you can see right here. This has been the channel since '08. So it touches right here. And it now broke below it. And our first rebound is now retesting this area. As you can see right here, and we are now seeing a little bit of a retrace. But it's not too important yet. So if this moves like '08, we would now expect, as we had in '08, a reversal flag like this to be formed. See price action move inside this pattern. Then we would, and I can draw this. Maybe use use the drawing tool. There it is. So we could like move like this. See, then break out, retest the trend line plus, like see the retest this area. So our trend line plus the bear flag. Right here, move like about here, and after that see it drop and move back down again like that. So this would be the exact movement of '08. So if we now zoom out, and I'm going to draw the trend lines, or I make them colorful so you can compare this a little bit better. So I make this red, and I make this also red, like that. Yeah. So now you can see this. Yeah. So we had a channel forming here. This is of course a way bigger move. This has been like from '03 to like five-ish years, and this has been a decade. So I'm not really surprised that first it's a bigger move, and second the channel is bigger, and therefore I would also look at this channel to be broken, like I did right here. And yeah, so as I told you, channel, bear flag, breaking, retesting a first move of the trend line of the channel, which did. Then after that, forming a reversal flag right here, seeing it break a little bit above, go back to the trend line of the channel and to the downward trend line, or to the support line of our bear flag, retest it, seeing drop below, maybe go about to the level of this right here to create some sort of flag, maybe, and then seeing it drop after that. I'm not going to say that we are in a bubble like we were in 08, so I'm not going to say that we see it drop like drastically like we've seen at that time. But what I would very much be looking closely, and we can draw this like this, is that we see some sort of retest of around 2,100 on the index and on the S&P 210. Then and maybe see then a little bit of a rebound. If this will be our bottom, I don't know. If we form our analysis like we did, or if we base our analysis on 2007 to 08, this would be not likely, and we would see a drop of, like we've seen, what was it here, from 1,200